Hello, everybody. Today is Monday, July the 22nd, 2013. My name is Michael Wright, and this is the Daily Elliottwave video. Just before going forward, please do pause the recording and read over the risk disclaimer. All right, very great continuation to last week's trade. Last week we were up just about 200 over 250 pips for the week, a little bit over 200 pips. So first week was a little shaky, second week we recovered, third week we really exploded, and really right now looking to continue those gains. As of late, we are in 3 open trades. Please do click on the members area if you are ever in doubt, and then you can always see this in the main location, but you can also see it in the trading signals area. Now, those 3 open trades, Aussie dollar, we continue to hold from last week's session as we entered at 91.59. Currently, that position is up just about 100 pips, as current price action is 92.58, so 99 pips. Stops now are trailed to 91.90, locking in 31 pips. And at the same time, we shorted dollar Swiss near the open, and this position currently up just about 30-40 pips there as well. And the third trade, the only trade out of the money, is the short pound Aussie. Look at that as a back test. So nice resistance zone in my opinion. So looking for it to fall into the 164 zone. Do not rule out if I look to modify those targets into 160. I will talk about that and as well as the Aussie dollar now. Okay, so 3 open trades. Gonna stick with these three. And really go try to get us into the 400 or 500 pip profit mark as we look to close out the month of July. And so far for us, a really great summertime trading. I know on average you hear those who say summertime is the worst time to trade because traders go away. I will always say don't really look too much into that. Just keep to price action, as price action really doesn't have a bias, whereas us as humans we tend to. All right, but in any case, pound Aussie. So far so well. Now this back test, and let's actually see. So again, for those on the trade copier, it's automatically triggered, so you can see these positions right from my level onto yours, and then you can also see it in the copier back test. But nice retest of resistance. Once we really get into the break of the lows of 165.20, I'm looking for this to really start to decline and gain some momentum to the downside. Now, whether this is a 1-2 or an AB, neither does matter, as they both look to point in the same viewpoint. So I will go ahead and then I'll actually label this for you so you can get a better understanding of what I am referring to. Okay. So here, momentum divergence was pretty apparent, so that's why I do like that short. And I mean, this is the A, B wave, and then now what we have here, we can have an AB WXY, a complex decline, or we can have an AB, then a 1 2 3 4 5, and it could run down into 154.67. So that's why I said do not rule out if I modify my targets. 164 is a little bit too close, especially in my opinion, especially really taking into consideration the volatility that we see in the pound Aussie. 160 maybe a better target zone, and then I'll look to start scaling back indeed around 164, but I think let's scale back rather than close it all out around 164. Another reason why I do like it into that 160 area is that if you look at it on the daily time frame, that 160 will be an ideal back test before continuation to the top side. Playing that back test and then getting long again for new highs makes sense, as we see around this zone that is getting pretty complex. Usually we see that in third waves, so if that being said, this could be the top, could be a third, pull back to the fourth, and then a fifth blow out to the top. Now this actually goes pretty darn well with the Kiwi dollar, as even though we're not in this long, we do like longs into the 81.36 before another sell-off. So what does that mean for the Aussie? It means same pace, right? We are in that Aussie long, so ideally same thing as you correlate the two commodity currencies. So Aussie I still like for 94. We're trailing stops higher rather than going ahead and closing it out. But 94 will be ideal. So again, higher levels in Aussie dollar, lower levels in pound Aussie, higher levels in Kiwi. It's all the same idea set as we're looking for risk to continue its bullish momentum. And here, yeah, you have the same thing. The bullish viewpoint on dollar Swiss is to the downside as we go against the dollar index, right? Here, I think the regular targets are for 92. I'm actually gonna look to close it out near 93, but ideally 92.60. That could be a reversal zone for dollar Swiss. So anybody looking to get long, look around that level. But for myself, do not rule out if I either close it all out by 93, but I would definitely look to be out of it near 92.60. All right, so a heads up if you're not on the copier and you're doing it manually, don't rule that out. All right. Other than that, we talked about the Kiwi. It's gonna be the same thing across the board. Euro dollar, like it for higher levels. Next topside resistance, I'll look for shorts around 133.40. Again, we have about almost 150 pips left to the top side of the euro. Around there, I'll look for shorts. Kiwi, I like higher as well. I'll look for shorts around 81.40. So let's see how these moves overall play out. If you have any questions, feel free to join Liam, Chris, and I in the chat room, or you can Skype me directly at wtcg.mike. Alright, guys, cheers, good luck trading, and talk to you all soon.